Hey everybody, welcome back to the Thursday night financial thing investment live stream. Let me change the color here. I think we got to go back to blue today. Hang on. We got to go. Yeah, there we go. The blue feels right today. The green was feeling a little off. So, got a lot to get through today. We're going to do some peer-to-peer lending news. We're going to take a look at some funding secure loans that we know are in administration, see what's going on with them. We had a few updates. Excuse me. Got the green shake today. Spinach, vegetables, trying to stay healthy, avoiding the C to the D. And we're going to look at the trading 212 portfolio, see how that's doing. We're going to look at the Vanguard US index tracker for the last 1 year, see how that has performed, some other cryptocurrency news. So a lot to get to. Don't forget, here every Thursday at 7:30 p.m. UK time, which is at the moment 3:30 US Eastern time, because you have gone forward an hour in the UK and we have not yet, because we're always sort of lagging behind. And yeah, sponsor Kuflink, as you know, has been sponsoring this channel for a while. Sign up, receive up to £4,000, that's UK, cash back on your first investment. That's if you're a new investor. Terms and conditions do apply. Remember that your capital is at risk. It's not covered by the FSCS protection on any investment, and you can sign up at join.kuflink.com/financial-thing. Again, thanks to everybody for tuning in. If you're watching in the future, welcome. You can tune in live on Thursday evening. Please hit that thumbs up if you like the stream. I hope you do. Also going to be talking about cryptocurrency mining. I have actually entered into the cryptocurrency mining field, and I'll show you what that means, and if you are interested, you could do the same very inexpensively. It's pretty interesting. So let's say hi to everybody in the stream. Debbie at Mixed Media Arts is here from the autumnal Cayman Islands. Still 28 degrees today. Welcome, Debbie. Nice to see you. Who else we got here? Colin Perry at the Peak District. Steve Manton in wherever you are. I can't remember what you say. It's 5 degrees Celsius. Excuse me. That is pretty cold. I feel bad for you. We're here in Orlando. It's pretty warm today. I think it's about 26 degrees. So not to make you jealous. For some reason, I have this little allergy cough going on today. No, it is not the C to the D. Chimpo Naughty is here in Cambridge. Darren, nice to see you. Paul in Kenilworth. Robert Pates in Crete. But usually in Crete. Now you're in Hornchurch. I bet Crete is probably a little bit warmer than Hornchurch. Alan Toombs in Basingstoke. Arthur Atchison. Hello from Belfast. Peter in Leatherhead. Mike, as always, in Sutton, Southampton. My neck of the woods, near Dorset. And Stephen Haling in Nottingham. Alan Stratford in Malvern. It was a lovely day for a bonfire. Yes. In that nice cool weather. Paul New here, Stockport. On time for a change. Nice to see Patty in France. And to everybody else, Dave Allard is sitting in front of a log burner with a cider in the Midlands. That sounds nice. Annabelle, hola a todos, ¿cómo está? Annabelle, I presume you are in Spain, hopefully enjoying some of that Spanish warmer weather. John Day is in Nottingham, so to everybody else in the stream, welcome. Let's get right to it. Let's get right to the peer-to-peer lending news. You know, the peer-to-peer space seems a little bit dormant at the moment, I'm going to be honest. With all this cryptocurrency stuff, the stock market is raging forward. Peer-to-peer, sort of the steady horse in the race if you could pick the right horse out. It feels a little dormant at the moment. The strong players are still continuing to be strong. And then you got the kind of new up-and-comers. It's a pretty interesting space to be in at the moment. So let me go ahead and show you what's going on in the news now. One of the guys that I've actually spoken to before, Robert Pascoe, they are launching soon and they're going on a hiring spree. And I think PLend is a really interesting player in the peer-to-peer lending space because of the way that they're going to be using analytics to check consumer credit scores, which is going to become really handy in the personal finance space. So, for instance, consumer loans that are done through companies like LendingWorks, PLend is just going to perform a better job, hopefully, at really analyzing credit and data, however you want to say it. So PLend is going on a hiring spree to do that, hoping to get Robert onto the stream when they launch, tell us a little bit more about what PLend is doing. But I think that's an interesting space to look at. It's not one that has been really targeted, and yet now with open banking starting to become more popular, I think this is going to be maybe a good new peer-to-peer lending play in the future. We'll see. This is interesting. British Pearl to launch Property Trade Association. Now, British Pearl has recently sold their entire portfolio, and from what I understand, has paid back investors. Now, did they get all of their money back? We'll look into that. I was not a British Pearl investor, not a fan at the time of what they were doing. I did sort of look into that company, and there's just something about it that didn't sit right. And subsequently, they end up just shutting down their peer-to-peer lending side of things, selling off their portfolio. They thought the market was not favorable. But they are going to launch a property trade association and work with several UK and European property platforms. Interesting. See what happens with that. They say the purpose of the trade association is to create a single voice for all real estate platforms globally and help set operational and conduct standards. Now, while I'm all about associations, what I do find to be probably more productive is that British Pearl maybe focuses on their business and building that back up, but that's up to them. Yes, you can see here British Pearl complete sale of property portfolio and repays lenders. I don't think that everybody got their money back, though, from what I remember seeing, and don't quote me on these numbers, but maybe 10% people that own property shares took a 10% hit, whereas the people that had invested in other sides through that business did get their money back. Anytime people take a loss, that's never a good thing, but I suppose it could have been worse, and British Pearl did do what they thought was best for their property portfolio, which is dumping the whole thing and selling it. Obviously, they were able to attain decent values for their business, and it's good to see people paid back. I always like that. That's an important thing. It says here that investors solely holding loans in their portfolio did well, receiving the original principal loan amount back plus all promised interest, which averaged 4.9%, as there were no defaults or missed interest payments in the loan portfolio. And the announcement revealed that investors solely holding shares on average incurred losses of around 10% when including dividend payments and incentives, while lenders who had a balanced portfolio, which would have been loan portfolios and shares mixed, would come out flat or in profit, depending on their portfolio configuration. So not a very good result for people that were just holding shares, but again, this is part of the risk of investing. You're not always going to win, and British Pearl unfortunately was not one of those winners. Here's an interesting story. CrowdStacker going for growth despite revenue decline. So they have said that their liquidity position is improving after spending most of its financial recent year investing and restructuring in the business. In the company accounts posted on a company's house, he said, there's a reasonable expectation that the company and the group have adequate resources to continue in operational existence for the foreseeable future. They've had some issues from a borrower who is in liquidation, and they have recovered some funds back from that borrower. Doesn't give me the warm and fuzzies about CrowdStacker. They made a pre-tax loss of £274,000 in 2021, and which is an improvement from a £360,000 loss 2020 accounts. But you have to wonder what's going on with CrowdStacker, and especially when you're seeing the revenue decline. Not always the best scenario. Full disclosure, I do not invest through CrowdStacker. Really, aside of these numbers, don't know too much about them. Not really been that interested in the company as a place to put money. What else we got here? Former Dragon's Den investor says peer-to-peer can help level up the economy. Yeah, this guy Piers Linney, I think I pronounced his name right. He was Dragon's Den guy, and he's very bullish on peer-to-peer lending, saying it can present opportunities for businesses to be able to access financing much easier than the traditional banking ways, which is good. And then he's saying that there's a lot of growth that can be utilized on these kind of decentralized ways of financing businesses, and that the key to really businesses growing is being able to access financing. In the traditional banking ways, let's face it, it's always been very difficult. You and I try to go to a high street bank for our business to get a loan. Go try it. It's tough. It really is. If I try to go and get financing for my business here, I doubt that would ever happen. But peer-to-peer, I'd probably have a shot at doing it. I think at the moment what's going to happen with peer-to-peer is it's just, you're kind of seeing this stagnant area with the FCA clamping down, regulatory, not allowing probably some companies to come into the space. But in the future, I think as things settle down, maybe we'll see this space kind of growing a little bit more. And there are some people like Piers who are very bullish on the peer-to-peer space. LendingWorks expect an annual loss, and the returns remain stable. So LendingWorks has revealed that its expected annual losses and returns have remained stable, while negative rates are still required in 2 of its loan cohorts. And this is, one of the reasons I've been withdrawing from LendingWorks, because I do not want to leave my money in a company that still continues to charge negative interest. I think that ship has sailed. I don't really understand why. Well, I do understand why, but, we're now way down the line, and to still be being charged negative interest on some of the loans, it doesn't sit well with me. So, but they expect it to stay stable. Not the best case scenario if you're an investor. In LendingWorks on peer-to-peer in general, you don't want to see negative interest rates. And I understand, this whole COVID situation has been very tough on financial lending businesses within the peer-to-peer lending sector. But come on, we're in November now, coming into 2022. Sort it out. Let's get those negative rates out of LendingWorks' loan books. So here we have a prominent financial writer and investor who's labeled peer-to-peer lending as a growth area and cryptocurrency as the future of investing. This is author and comedian and voice actor Dominic Frisby, pictured here. Kind of looks a little bit like Billy Bob Thornton, doesn't he? Am I the only one that thinks that? But I like the gray, he's looking good. But he thinks peer-to-peer lending has to be a growth area. And he said, the FCA and Bank of England have been very wrong on crypto. It's clearly the future. I definitely agree with him. I think the Bank of England is very wrong on crypto, and will change their stance eventually. I like what this guy says. People dismiss it as a bubble, but it's a $2 trillion, 1.4 million pound industry now. It's been around for 12 years. It is not going anywhere. Money is technology. It's always been technology. And we're in a world of non-government money. Anyone who bought Bitcoin at any time in history, as long as they didn't sell, has made a profit. That doesn't apply to other coins. I don't know if that's particularly accurate. If you bought Bitcoin when it was $66,000, right now it's 61. I don't think everybody's made a profit, but historically, if you bought Bitcoin, held on to it, you did well. So he also says it's volatile, it's the Wild West and full of scams, but it is the future. Very true. Over thousands and thousands of cryptocurrencies now, more being released every day. Tons of bad ones out there. We've had a cryptocurrency collapse this week, a very small one called Squid Games. So you do have to be careful. You need to stick to the good currencies with the good projects. But I like what he has to say. Dominic Frisbee. What a name. Isn't that one of the things you throw and then you let your dog catch it? It's very interesting. And here we have an interesting study that says 40% of crypto holders have been investing for 3 or more years. So that would tell us that quite a large number have recently come into the market. It says 1 in 5, 18% investors have started in the last 6 months, with 6% saying they've only come into the market in the last 3 or 4 months, despite recent price falls and market volatility. So a really good high percentage of investors have been on cryptocurrency for a while. I think you'll find a smaller percent probably within the last 5 years have come into the market. But this adoption rate is continuing forward and is going to get higher. Let's look at a couple of funding secure loans. We've had some updates this week. And you can see one of my loans here that's in my account. This is Camden Street in Liverpool, which is a 1.8 million pound loan that was based on a gross development value of 2.75 million pounds. So let's just soak that in for a second, that this facility 1.8 million lent and a gross development value of 2.75 million. So we look at the update here and it says on the 30th of September the property sold at auction for a sum of £712,000. Now how can you get that so wrong? Valuation 2.75 million, recovered 712,000. So what, 60% less than it was valued at? Not really looking good for the people in funding secure. This has been dragging on for a very long time. If you look at the loan updates, you can see this goes back to 2018. So we're now coming up to 4 years in. Okay, yes, it was sold. So, that is a result. But when you're losing 60% of its value, that means that investors are going to take a hit. And then when you add administration fees in there, all the other fees, legal fees, a good chunk of this 712,000 is going to be paid out to investors, but a pretty decent sized percentage of that will be lost to administration fees and legal fees, which sucks. But it is what it is. We don't really have much control over this. This is the problem with these defunct companies that are really in the toilet of peer-to-peer lending, funding secure, Lendy. The other ones that who they are. I'm not going to keep mentioning them, but this is just a real example of what happens when companies liquidate and go into default, and then they have to fire sale properties for very, very low amounts of value, and somebody has probably made out pretty good on this property sale or auction. Had a guide price of just £350,000 too. So a pretty low guide price. So yeah, it is what it is. And on to another one here. This is a South Wales property. You can look at the loan amount of £337,145. And in this one, the receivers are confirmed that the initial sale was to a company, and as part of the sale terms, the receivers hold a personal guarantee for the director who controls the company. In September 2019, the guarantee director gave the receivers notice that they had been advised to put the property into an SVPV in order to ring fence the asset should there be any problems with the company in future. Then the company went into voluntary liquidation, and as a result of this, the SPV is selling the property, and the receivers are not in any position to consent or reject the sale, as they are not party to it. And the receivers have solicitors made attempts to correspond with the solicitors acting in the sale, but they have not had a response. So obviously the solicitors are dodging the receivers. Is that a dodgy sale? Looks like it to me. Looks like somebody figured out a legal loophole and was able to move that asset into a ring-fenced company who, God knows who they're selling it to. They could be selling it to their Uncle Joe for God knows how much. And again, unfortunately, the investors are the ones who are going to get their hands slapped on this one. Very unfortunate. I don't know. You let me know what your thoughts are on that. It's a shame. It's really a shame to keep on reading about these types of situations that keep happening, and nothing seems like it is going smooth at all with these administration sales. And it doesn't look like it's getting any better. You're sort of at the end where you're seeing some real problems, some real legal issues coming to light with these properties that have gone into default. It's a shame. I hate to see people losing money, myself included. Kind of painful, but it is what it is. That's the risk of investing. You know, it is what it is. Unfortunately, we try to make the best decisions we can. Sometimes, you know, not every investment is a winner. I mean, myself included. I picked some bad ones, and that's just the way it is. You get some good ones, you get some bad ones. Hopefully, somebody didn't shove their entire life savings into funding secure loans, thinking they were going to hit home runs every single time. But not such a good result there. Moving on, we're going to look at the Trading 212 portfolio right here. It's been a good week. We continue on with this portfolio that I started in September of 2020 in an effort to beat the indexes and show what a genius I am when it comes to stock picking. I'm going to be breaking down these trades too in this account and showing you the winners and losers broken down in percentages. I'm going to do that next Thursday. Am I doing that? Actually, it's going to be next Wednesday. By the way, put it on your calendar. Next Wednesday, I'll be doing the stream because Thursday I have something that I have to do. So Wednesday, we'll be doing the stream. And we'll go through all the trades, and you can see which ones were good trades, which ones were bad trades. But in general, you can see the portfolio now has risen to 16,425 pounds, again, starting from 5,500 pounds. I wish I could get results like this in the stock market all the time. I've been extremely, extremely lucky. Timing has been everything. You can see we had a big bump on this Centrus Energy here during the last week. One of the biggest wins, percentage-wise, absolutely 144% up. I mean, look at the last week, 33.22%. And I was not sure about that stock. There was a couple of times where I thought about ditching it. If you look at the, you know, in this area, I just didn't see it really performing the way that I wanted to, but we just got this big run up here from 37 US dollars all the way to 69, so it's been crazy. 212% up in the last 3 months. Good one there. CleanSpark, the cryptocurrency miners, have been doing really well. I've been holding those. You can see CleanSpark up 53%. Comstock Resources Energy down 9%. Diamondback Energy up 8%. Flex, another energy stock, 7.37% in the green. And then here, Hut Mining, another cryptocurrency miner, up 86.94%. We got Laredo Petroleum, which has seen some real volatility. I mean, look at the chart for the last month. We were up here at 92, dropped all the way back down to 69. Kind of a big drop off, and then again, you're seeing these spikes here, 75 up to 78. Just when you kind of think there's going to be another good run up, it just breaks your heart from down here. 73 runs up to 86, and then blum blum blum. Kind of looks like Batman's mask, or a mountain range here, but right down to 69. Oil under some pressure, but I continue to believe that what happens is oil goes down, people are buying the dips on these energy stocks, and then it just pumps it back up again. Oil is totally being propped up and will continue to do so for the time being. We'll see what happens. Lloyds Bank up again, 90%. Again, dumped a lot of the Lloyds Bank shares, but taking profit is never a bad thing. Meta Platforms. What the hell is Meta Platforms? Facebook has changed its name to Meta Platforms. Very strange. But made a bit of a run here back to 2.5% in the red. So we're still a little bit down. We started in at 349 US dollars, so a little bit in the red. Still think Facebook is going to perform well. Microvision, kind of written this one off. Don't really. I mean, I guess I could dump them. £294 loss, take a tax write-off, but such a small amount, not really bothered too much. Occidental Petroleum up 21%. Olin had a very small position, up 34%. Palantir finally going into the green. I had averaged in, that thing just kept falling. If you look at the last month, my average was 25.62 US dollars, and bought in it. I think I bought in right here at 25, and that dropped. Oh, I think it was maybe. I don't remember what. Well, my buy-in was at 25.62, but that wasn't the first buy-in. I'd made one buy-in, and then went into the red. I think about 8 or 9%. When it dipped, I decided to take the plunge and buy more. That's always hard to do emotionally when you see something in the red, to go ahead and plunk more money in, but that's what I did, and now it's actually back in the green, 4.6%. I think Palantir is going to do very well in the long run. Tullow Oil, down 18%. For some reason, this little UK company does not want to behave itself at all. I don't know what's going on with Tullow, but again, I'm hanging in there for the long term. On this, you can see the 1 month chart down 15%. Not looking great at the moment, but we'll see what happens when they do earnings, and maybe the stock will take a good jump. And then Vermilion Energy up 52.77%. Had a good run on this. Again, happened to buy in at the right time, $7.26, £5.31 entry point. Now we're sitting over 10. So pretty good on Vermilion. So the portfolio still continues to do well. And from this portfolio, if you are not aware, we were able to make a couple of donations to Forest Home, which is where my dad received hospice care when he passed with cancer. And we were able to give a donation out there from this portfolio, and we'll continue to do that from the profits. And also Worldwide Healing Hands, run by my friend Dr. Paula Danda, this wonderful woman right here who takes her team overseas and does medical mission trips. So able to donate $1,000 total to Dr. Paula and to Forest Home. So really super happy about that. Let's look at Vanguard. What's going on? I've been telling you, for a few years now about the Vanguard US Equity Index. If you're not an advanced investor and you just want something easy, this index tracker fund has really performed well, and it has continued to do so. It has for even back before I started mentioning about this tracker fund. So we're going to look at the last year. Going back 25th of October 2020, we started at £572 price point. This was a month after we started the trading 212 portfolio. And then looking forward to November 4th, so we're not, it's a little bit less than a year. Actually, a little bit more than a year. 4th of November 2021, so we went from £572 all the way to £764. I mean, what a run we've had in the stock market this year, and that is about a 33% increase. So you can see right here, 33.55% increase on this Vanguard US Equity Index Fund, which I continue to think is one of the best ways for passive investing. If you don't want to worry about trying to pick out stocks, you just can own a lot of the market with this 4,059 stock fund. It gives you great exposure to all of the stocks in the North American market, weighted very heavily to the big stocks. It's the way it works with the fund. But you can see Apple is 4.89%, but you get you get exposure to 4,030 stocks, and it also pays a dividend. This is the accumulation fund. You can see here the distribution is yield 1.07% dividend. So not a huge dividend, because obviously it's averaging out all of these stocks. A lot of them don't pay dividend. If you want the income class of shares, the actual distribution on the dividend really isn't much better. Like you're only getting 1.09%, and the price of this one is almost £100 less. So you're always better to go for the accumulation share class if you want to do this index tracker. Look at the fee on this, 0.1% for that fund. Super low. So you can save a ton of money in the long run, and this fund has just continued to do really well. And if you're one of these staunch people that loves the FTSE 100, I don't know if you can see this, you probably can't, but this is the 5-year chart going back to, you could just see it was 5 years ago, it was 6,730 in the FTSE, and we are now at 7,279. So 5 years, you're really just not seeing much growth. Only 8% total in the past 5 years. That's not good. So, again, this is the reason why I like the US fund. The FTSE 100 has just been kind of dormant for a while, up and down, not really moving much. I would say there's better opportunities out there. Even if you went for the global tracker, you'd be in much better shape. Now, one thing I want to talk about is what's going on in the US economy. Again, I know most of the people watching in the UK and Europe, but the US economy is generally a catalyst for what's going on with the stock markets around the world. And, I think we're in a lot of doo-doo with the economy. We're not seeing good numbers coming out, even though the media would have you believe that everything is all good and we're doing really well. The stock market's at all-time highs. Look, the stock market is not tied to the economy in any way anymore. That has changed. There's huge amounts of manipulation going on. It's being propped up by this Federal Reserve monster, Mr. J. Powell. But they said this week that they're going to start tapering money printing that has pretty much kept the economy afloat. So they announced plans to taper the $120 billion a month in bond purchases, and they will reduce it by $15 billion a month starting this month. And purchase of U.S. Treasuries will drop to $70 billion a month from $80 billion. Now, it's so asinine what's going on in the U.S. federal government, because they're literally printing money and buying their own assets. It's the weirdest setup ever. And what these stories don't tell you, though, is this is the minimum amount that they will purchase. They have an uncapped amount that can change whenever they decide. Whenever the government decides it wants to buy more assets, they have an uncapped blank checkbook to write whatever check they want. So we're talking about a minimum of $70 billion in US treasuries, which are going to be bought up, and a minimum of $35 billion a month in mortgage-backed securities. I mean, this is a huge problem. So the economy is not all good in the US. We're seeing some numbers that came out today which are really terrible. But the media would have you believe that the economy is doing great. And you need to pay attention to this, because once the US stock market turns, what's going to happen is the UK stock market is going to turn, because they're all key linked. And we need to pay attention to these numbers that are coming out and this narrative. So Reuters here is saying weekly jobless claims in the US fall 14,000 to 269,000 people. So 269,000 new people, right, in 1 week claimed first-time unemployment. This is really bad. These numbers are terrible, right? And then it says continuing claims drop 134,000 to 2.1 million. Now, this is the biggest and the most scary thing about it. Unit labor costs rise at 8.3% rate in the third quarter. So labor costs have gone up 8.3%, and productivity has fallen at a 5% rate. So what that means, labor costs are becoming more expensive, and productivity has fallen. So maybe it takes longer to manufacture products, and the labor cost is becoming more expensive, which means what's going to happen? Products are going to become more expensive. And I don't know if you've noticed, but I've certainly noticed how much higher things have started to become. Even just things like goods, food, petrol, it's all getting more expensive. And these numbers are just showing how bad this inflation situation is. And this is not transitory. The government says, they keep using this transitory word, but they're basically just lying to everybody. It's not transitory. This is a problem, and it's going to keep on getting more and more of a problem, and inflation is going to keep on rising. And the government wants this. The U.S. government wants inflation to rise. They're trying to squeeze out the middle class. The middle class is just getting obliterated. I don't want to get into conspiracy theories about control and all this stuff, but this is happening right in front of our eyes, and we have to pay attention to this. Now, with this news, right, what was interesting, we had new highs in the stock market when this news came out. So that means the stock market likes bad, they're just paying attention to this and saying, this doesn't mean anything. This drop in money printing doesn't really mean much, which is very true. But these numbers are bad, and they're good numbers to pay attention to. This is why I continue to buy things like Bitcoin to become separated from fiat currencies, because the Wall Street is controlling everything, and so is the central banks. It's becoming a bigger problem. It's snowballing, and eventually it's just going to explode. It's been happening for years. We don't know when it's going to implode, but it will, and a lot of people going to get really hurt by this monetary policy that is happening right now. It's largely being ignored because people are looking at the stock market going, stocks are high, we're making money, all-time highs on Tesla, all-time highs on all these stocks, but it's all being propped up, and it's really sad. So I pay attention to things like these numbers, because these numbers are not good. You should pay attention to it too. And I think, there's a case right now for, I've never been a precious metals guy, but I could say there's definitely a case for moving into some safer assets to hedge against a stock market fallout. So gold and silver, some Bitcoin, things like that. I don't own a lot of gold myself. I got a couple of gold stocks. It's something I find really hard to move into because it just hasn't moved much. But I see silver starting to move now, and if these markets do turn around, those precious metals are really going to go up a lot. So take that information for what it's worth. Let's look at the cryptocurrency space right now. We've kind of seen Bitcoin just going a little bit sideways, but still way over that $60,000 level that was an important spot for it to get through. We see Ethereum absolutely exploding over the last week, hitting all-time highs. Look at this. if you can see this 13,606 cryptocurrencies out on the market, a lot of them, 99% of them, will go to absolute zero. So be very careful if you're a crypto investor jumping into these stupid coins. I mean, look at some of these names: Comstar, MAGA coin, Make America Great Again coin, Alpha Shiba Inu, Little Doge Floki. I mean, they're just ridiculous, and they're jokes. You know, they're actually going to crush a lot of people who are trying to make money in these projects. You can see some of these gains: 698% in a day, 584% in a day. For the Squid Game coin, ridiculous. So be very, very careful. I tend to tell new crypto investors, stick to the projects and the coins that are actually doing something. They have use cases. Obviously, Bitcoin being digital gold, Ethereum is being used thousands of transactions on platforms all across the internet right now. So hence this price rise. Binance coin, Solana is a great project. Say Ethereum competitor, has a lot of money behind it in its development. So things to pay attention to. Cardano, it's one of these projects that hasn't really done much, but when it goes live and when these applications start to come onto the Cardano network, and that could be a coin that really explodes. XRP Ripple, still involved in the lawsuit. If they win that lawsuit, I expect that coin to really take off. And there are some really good projects, and I wrote on the Facebook group about gaming. I think gaming is going to be one of the next big explosions within cryptocurrency. So there's going to be some amazing opportunities there. The problem with a lot of coins right now is they're hard to buy. You have to use decentralized exchanges to buy them. You can't hop on Coinbase for a lot of these smaller coins. But if you are interested in starting in crypto, Bitcoin is just really the best and the safest place to start. And then maybe get some Ethereum too. Solana, I think, is a great project. So you can see here, there's a report. Bitcoin and Solana investment products see highest inflows in October. There's a lot of money that have been coming into these coins. I think you're going to see, Solana is a coin that I think could hit $700. So right now it's about $250. Just tons of use cases. It's very cheap to use, not like Ethereum, it's very expensive. But you're seeing a lot of inflows. Bitcoin products saw the largest volume of inflows, with 93%, 288 million being allocated towards the largest digital asset in market capitalization. You've seen these ETFs too that are coming out doing, selling Bitcoin futures. One of the annoying things is these ETFs are generally misunderstood. Basically, you don't even need to own any Bitcoin inside these ETFs. It's like one person says to another, I will make a bet with you to buy Bitcoin in the future, X amount of pounds or dollars. And there is no actual ownership of Bitcoin inside these ETFs. They're very much speculative ETFs. What is going to really change the market is when we see real BTC Bitcoin ETFs come out in the future next year. The SEC is going to approve these things. I'm 100% sure. They can't really not, now that they have these futures ETFs out on the market. But there's been a big inflow of money coming in. We see JP Morgan now renewing its $146,000 long-term price target for Bitcoin. The bank says Bitcoin is increasingly looking like a digital alternative to gold in the eyes of investors, and that cryptocurrencies are an emerging asset and thus going to be on a multi-year structural uptrend. Now, remember, Jamie Dimon, the guy that is the head of JP Morgan, hates Bitcoin, but his company is still saying that they see Bitcoin heading towards the $146,000 mark. I think that price is very conservative, and we're going to see prices go much higher than that. What else? If you haven't yet, hit that thumbs up button. A lot of information today. As I told you, I've gotten into the Bitcoin mining business. And through this little guy right here, let me show you. This little dude right here is called an aware element. And what it does is it monitors your air quality. It's pretty cool. You can actually mine coins with this thing. So, I mean, it's not technically mining, but what you're doing is providing your air quality data to a company who pays you in coin tokens called Planet. And I paid, when this was on sale, I think it was about $134, so about 100 pounds. And I think this thing is going to be able to mint coins called Planet tokens in the range of about $100 to $150 a month of rewards. We'll see. I'm going to keep you updated on that. Now, if you're in the UK, you can actually buy this air quality monitoring, and you can actually mine your own coins here. But you can see here the price has really shot up from when I first bought it. And unfortunately, it's the same in pounds as it is in dollars. Right now in the US, they're $299. And what happens is you get to mine these Planet tokens. So in order to, when you give your air quality data, they pay you in these coins, and the price of these coins right now are about 31 cents each. So there is value to them. You can actually sell them. This is a way to get into crypto mining. If it's something, you can make 100 to 100 pounds a month, 120 pounds a month, providing your data, then that's a pretty good little source of passive income. I think that's very achievable and very inexpensive. It's not like if you're trying to buy Bitcoin mining machines, you could be looking at several £1,000s just to get into that space, and they're noisy and they use a lot of electricity and they're hot. This unit doesn't. It's nothing like that. It's just sucking in the air. And it'll give you a reading. I haven't set it up yet. I'm still trying to figure out how to do it. But once it's set up, it's going to give me an air quality reading number right here on its digital screen. So it's kind of cool to really look at, see what the air quality is like here in the financial thing kingdom. But yeah, so pretty cool, pretty interesting. Let's look at the price of this Planet Watch coin. You can see here it was at a high of 43 US cents, and we'll see what it does. This could be a dollar coin, who knows? And then that could be a good little way of generating money passively. So that's my little run into the mining of cryptocurrency for now. And I think that is everything this week. Covered a lot of stuff. If you have questions, pop them in the chat. I'll answer them. Hope you enjoyed all the information. Very excited about the cryptocurrency space, particularly Bitcoins. I think we're going to go up towards that $100,000 mark. Hopefully by the end of 2021. We shall see what's going on with that. Let's mute the phone. Oliver Jones is here. Aki Chap is here in Accrington. Alice Straff. Let's look at... Alan said, British Post sold all our loans to Lord Fink. Platform backer at a loss to us. That was a sham vote. They said they would sell. Anyway, very dodgy. I wouldn't touch them again. Lord Fink is smiling. Is that true? Wow. That is unbelievable. If that's true, I mean, he was involved in the backing of that. Did I meet him? No, I didn't. I think I met Ali. That sounds really shady, though. I agree. Hey, Brian and Woborn, you are late. That's okay, because we're glad that you're here. Coming up to tax time too, people. Don't forget to fund your ISAs if you haven't. I don't know if you know this, but in the USA, the ISAs here are quite different. So you can have a ISA, but you can only fund $6,000 US in that ISA. So it's about what, £4,000. So in the UK, you get 20 grand a year. It's a pretty nice tax benefit. Do I think Joe Biden has lost the plot? Oh God, don't get me started on politics. I'm annoyed over the Afghanistan thing. That wasn't necessarily just Biden, but look, I don't think he's going to make it through another term. Question is who comes in after him. I don't know. It's quite interesting to watch. I don't. What's the Troller coin? I don't know what the Troller coin is. Let me have a look. This is the Troller coin. It's got like a picture of Elon. It's down 21% today. It seems like anything with Elon Musk seems to be popular. Let's have a look what the Troller coin is. There's Elon and his dog, Floki. Doesn't really tell you much. It's some kind of NFT. Oh wow, look at these graphics. I think I'm in just for the graphics. There we go to Mars. Is that Mars? We're off to Mars. The father of all meme coins. Yeah, so all of these meme coins are just basically marketing ploys. Some of them have use cases, but some of them don't. You be very careful. You know, for instance, Shiba Inu, you saw this big run up in Shiba Inu, and then we've seen terrible volatility. But, you know, the one thing about Shiba Inu is at least it has a decentralized exchange. If you don't know what that is, it's a place that you can come and swap your money. Let me show you this. Better than Dogecoin, because Doge has absolutely very, I don't know if there's any use case at all. See if Shiba Swap is even working. So you can basically take your Shiba coins right here and swap them for other coins. You can take your Ethereum, swap it for all these different coins. So there is a use case there, whereas Dogecoin, none. No, they don't have a decentralized exchange that you could even swap your Dogecoin on. So I don't mind Shiba as much as I do Doge. Darren says, surely money regularly going into passive investments, index tracks, ETFs distort stock markets, especially the US market, because it's the most popular. Yeah, there's obviously, you've got companies like Vanguard that own really huge pieces of other companies like Apple. But I still think you're going to find in the big picture that index trackers don't make up as much of the markets as you might think. So, but if they weren't going into those passive investments, they would just go into managed investments. So the money would still be going into the markets. It would just be going different places. So the Troller coin. Yeah, it looks like you guys are trying to pump this Troller coin. I don't know. It looks like a weird thing to me. Be careful. Mike says, all the shakes I drink, not sure I want to know the air quality. You know, not to be disgusting or anything, but I was thinking about what happens if you let one go, and does the number on this air quality thing change? I don't know. So you're still waiting for my $70,000 prediction. Oh, it's coming. It's coming. Believe me. It's coming. April tax year ends in the UK. I know for us business owners, we have to submit by the end of next month, December. With interest rates so low, any suggestions where to invest? ISA allowance? Depends how much risk you want to take. I think spreading it around isn't a bad thing. You know, some of the one thing I've been looking at recently is I started to stake some of my cryptocurrency. There are companies that you can give your coins. I mean, you do give them. So you got to make sure that the company is legit. But for instance, in the US, there's a company called Celsius, which is they've got about $25 billion under management. You can stake your coins and they pay you different interest rates for different coins. You can buy USDC, which is a stable coin that ties to the US dollar, so it generally stays at $1. You can get 8% interest on that a year. So yeah, that's one way to diversify, get some crypto. Obviously, don't put all your eggs into one basket. I would probably just spread it around. I'd put it into an index tracker. I'd put some into cryptocurrency, and then just depends on your risk tolerance. Right now, the markets are high, but I still continue to see them going higher. Again, look at certain parameters at the moment. Keep an eye on US dollar. When that becomes strong, when the 10-year treasury yield starts to spike, and when oil prices start to fall, that's when you want to be worried about the stock markets. And if the federal government stopped this money printing more severely, not like they just did a little bit, then you want to watch out. So then you could, obviously have probably some gold, silver, precious metals. I think diversifying in those different ways would be okay. You're not going to get any interest in the bank for a while. Let's get rid of these troller coin people. There you go. You're gone. Yeah, Paul says fuel prices have shot up. $1.45 a liter. It's going to continue. It's going to continue. It's going to get more. Mike said, did I ever open a lender account? I didn't. Here's the reason why. It was quite complicated to do it, and I could have done it. But what troubled me about that was if it's complicated, the adoption level is going to be small. And I want to invest through companies that are going to grow. I don't know if Lendery has made it easier. I could totally open an account. I don't find things like that to be difficult, but I think other people will. Things have got to be easy these days. Even with this crypto miner, right? This has not been easy to set up. And I think that's a problem even though they've sold a ton of these. But things have got to be easy nowadays. Even if you tried opening a cryptocurrency account, it can be sometimes a little trickier. Places like Coinbase tend to make it easier. But you want things to be easy, and Lendery at the moment is not that easy. So that was the reason I didn't. But I know some people that are making good returns. Hey, Mark B, nice to see you. Welcome to the stream. Yeah, I think that's going to do it this week. We covered a ton. We're over an hour. And thanks for joining. Again, check out Kuflink, our sponsor, if you haven't already. And please subscribe to the channel if you haven't. If you're interested in supporting Financial Thing, you can become a Patreon supporter. You can just put your phone against this little QR code. Or search for Financial Thing on Patreon. And that's really about it. So I will see you next Wednesday. Put it on your calendar. I'll send an email out. And I hope you enjoyed it. And I hope you have a great weekend. Be safe out there. And that's really it. So take care. See you next time.